I'll start the webinar. Good day to one and all. This is Dr. Sivaraman of inoindices.com. So for this week, 6th to 10th of October, I'm presenting Asian Session Live Market Analysis on a Monday, that is 6th of October, between 5 and 5:30 GMT. I'll be giving the three components, namely the derived forecast and also the market reading, and explain more about the trading strategy, how we'll be able to withstand the market fluctuations using the trading strategy so that we will be able to grab profit during such volatile moves in the market rather than become afraid of the volatility of the market. Now, after that of Friday move, a big downward move in the case of Euro and GBP, and they come to that of the new trading zone, which would have given a lot of disappointment or a lot of surprise to that of the traders that their Euro and GBP have made the big drop. There is no scope for them to go up again. And so they thought that when non-farm payroll is much more than expected, then it is a question of only US dollar gaining more. And if you go back to that of the history with regard to the non-farm payroll release, we have seen many of the occasions that when the non-farm payroll is very bad, they just made Euro and GBP gaining the levels, and then subsequently they said risk aversion and started dropping Euro and GBP. Similarly, when the non-farm payroll was very good, they just dropped Euro and GBP and created the feel that US dollar has to gain in a one-sided way. And then subsequently, they reversed and say that it is due to risk appetite, Euro and GBP have gone up. So they are expected to give the second story this time for the gains in the case of Euro and GBP. Because after the big drop, those who have gone short would have booked profit, and those who have taken the long position at the higher levels, if they have not used the stop or the hedging, they would have just lost the position after the drop, thinking that no scope for Euro and GBP to go up. Then in that process, what will happen? Very few people will be having the continuation of the position or do the position trade from last week, and they may simply hold the position in the event if they have taken very less positions so that there is no margin fear. The others who might be holding the position, those who use the hedging to limit the risk, and they see the profit in the hedging and booked the profit and kept another hedging order below the market. So others, those who do the swing trades and those who do not have the hedging facility, invariably would have closed the positions. So now we need to find out what the traders are going to do. In what way the traders are going to commit positions for the players to make the moves in the market. That's more important. Because only when the traders commit positions, the players are known to make quick moves in the market. So that is why we always do the study initially with regard to the forecast. Then followed by that, we do the market reading, and we've tried to fine-tune the forecast and try to see whether the market is going to move in tandem with the other forecast or against. And then subsequently, still, we do not want to take chance, and we use the trading strategy, use the hedging in loss-making position, and use the trailing stop in profit-making position so that we continue to earn money from the other market. And none of the occasions, our positions will give a big loss to us. And it will be a manageable loss, and we will be able to recover that if the loss is very small. If the loss becomes very big, then we become stressful. We find it extremely difficult to recover it. Probably if anybody trades without a stop, and on Friday they had made a drop of 150 pips. So if somebody has lost about 150 pips in one shot, and it is not possible for him to earn back 150 pips in one single trade, because you know that they give the surprise moves and the traders become stunned and they don't understand that it is an intentional move on the downside and don't stop. That loss or either they should hedge or they should just cut the positions so that they will not incur more loss. But instead, once they become stunned, if the market comes down drastically, at the end, hoping that the market might recover, and if it is not recover, they just liquidate it out of the fear that the next week the market might open at a lower level and start making further downward move. So this is a question of only imaginations, and as a result, you find they close the position in distress towards the close of the day. And today is a Monday and a fresh day, and many of the traders would have closed the positions. So now the players have to induce the traders to take positions. So how they are expected to make the moves in the market in order to induce the traders to commit positions. So we will see the forecast part of it. So this is the first week. We'll continue to see the trend reversal move during the month beginning. And last week we saw only about 3 days. And this week we'll find the October 6th to 10th. And during this particular time, you find on Thursday, 9th of October, the BOE interest rate is expected to be announced. So till such time, you'll come across the market is expected to make volatile moves. On Wednesday, we will find that FOMC minutes are going to be announced. These two are the prime data which are going to be released in this week. And so what could happen? So if you see the forecast part of it, that they are expected to rise Euro and GBP for that of the FOMC minutes and for that of the BOE interest rate decision, they are expected to spike up the market. Okay, let us see what is going to happen in this week. Swing and firm up is expected during that of the Japanese session today, 6th of October. Then swing and slide is expected in order to give that impression to the traders that the market might fall. But suddenly they will just make swing and firm up move. And you'll come across again swing and firm up during that of Japanese and the European session tomorrow. And from the US session, they are expected to gain the levels. And then again, on 8th, they are expected to make a drop or a dip and then rise during Japanese session, and then swing and slide during European session, and swing and rise during US session. That will be the midweek either way stop-ins they are expected to make. And then later on Thursday, they are expected to make a dip before that of the BOE and then make the rise, so that those who are holding the position and see that what is going to happen to the position, they will induce them to liquidate the long position and turn sellers. And later on, they will gain the levels and induce them to do the short covering. And finally, you will find those who have been observing the market might think that market might make a big drop for the BOE interest rate decision, and then they will make one upward spike and induce them to do the short covering. And you know that normally at the lower level consolidation with a downward stop and moves, what they do is they just make such lower down the levels of trading. They make the drop in the market so that the traders lose patience. Those who are holding long positions lose patience and they liquidate the long and see that easily people who are selling are making money. I am a fool taking a buy position. That is how they will feel, and immediately they will also start making sell and buy trade without taking the measures to limit the risk. That's what happens many of the time. So they don't keep this tight stop, or they don't keep stop at entry when they are doing the trades of that nature. That is the lowest level, try to do sell and buy. But the players will encourage the traders to do sell and buy trade at the lowest level and buy and sell trade at the highest level. And technically also it will appear that such type of trades will give enormous profit. And later on, they are expected to make this swing and rise on Thursday during US session. And later, then we might see that the market has breached all the supports, resistance, and resistance turned support, and then the traders have to do buy and sell trade. Then on Friday, they are expected to make the swing and slide during Japanese session and start rising it during that of the European and the US session. Then next week, 13th to 17th of October, the market is expected to show the trending time. The upward trending moves are expected in the market in the case of Euro and GBP. When you refer to that of the currencies, what I have mentioned with regard to the levels, last week, Euro and GBP made the drop against the expectation of the forecast that they are expected to make the lower level swings and rise. Instead, they made further lower levels. But in the case of USDN, it has gone up. From that of the middle level, it has gone higher. CHF has also made the middle level consolidation and gained. And USD CAD also made the middle level consolidation and rise. And Australian dollar made the middle level consolidation and drop. And finally, what is going to happen now in this week? So Australian dollar and Canadian dollar, they are expected to make the wide range moves or the either way swings. That is, they're till year end, you'll come across the moves in a wide range, about 300 pips. So they are expected to make the higher level either way swings in the case of USD CAD and lower level either way swings in the case of Australian dollar. When Euro and GBP are gaining the levels, you may not come across corresponding gains in the case of Aussie. On Friday, you have seen that Australian dollar made about 150 pips drop, more than that of the permitted level of 100, and then subsequently recovered. But in the case of Euro and GBP, they made the drop of 150 and 180 pips, and then subsequently they have been accumulating the positions when the traders were selling in distress towards the close. So in a bearish market like that, when the market was freely making the fall, everybody wanted to sell, but nobody thinks who is buying against. In such a market, when everything is falling, everything is showing USD gaining more, but who is buying when the traders are selling? So if you question that, you will be able to understand that the players make use of such data release and make use of the opportunities and use them as excuses in order to trap the traders. So there are so many occasions we have seen that for non-farm payroll, the market has reacted differently. And this time for a good non-farm payroll, the market has dropped. Euro and GBP are dropped. And it doesn't mean that year afterwards that Euro and GBP are expected to make a reaction of this similar nature whenever the non-farm payroll is going to be announced. It is not always like that. There are so many occasions for a good non-farm payroll, they just made the drop and then subsequently gain the levels and say that it is risk appetite. So this time they may use a different terminology. They may not use risk appetite. Instead, technically they are oversold, so they are bouncing back or whatever it is. So they will try to give an excuse. So invariably, we have to keep in mind that the players create market sentiments and act against that of the traders once the traders commit their positions. Lowest level, the sell position, and the highest level, the buy position. So that is how the levels are being determined by the players. They try to hit the stops. And if the traders are not keeping stops and still holding long position, if they get the inside rainfall, then they make use of such data release and make big moves in the market. There are so many occasions in the non-farm payroll, they would have just made about 60 to 70 pips or 80 pips drop or the gain. And average was considered to be about 75 pips. But on Friday, they made about 150 pips because not that I was telling that Euro and GBP to go up and because of that the traders have taken buy position. Predominant of the traders used their common sense and thought that, okay, it is the lowest level swing, so we will try to take the buy positions. So that is how they had taken it. And then subsequently, when predominant of the traders have taken long positions, The players have got no other option than to make a big drop so that those who are trading without a stop will automatically liquidate the long positions in distress at the lowest level. So, what is expected in this week? Euro and GBP are expected to go up, and USDN is expected to trade in the range, and USD CHF is also expected to trade in the range of 0.97 to 0.95, and Canadian dollar and Australian dollar are also expected to be in the range, and the prime focus will be on Euro and GBP to recover. So last week we have seen more of a US dollar gaining move. This time we will find that the other four currencies, the majors, are going to hold in a range, and Euro and GBP are expected to gain the levels and thereby the contrarian moves to happen, and that will influence the crosses of Euro and GBP with that of the commodity pairs and with that of the yen crosses too, and also the European crosses. How exactly they can influence? I explained many times that when they make gaining move in the case of Euro, gaining move in the case of USD and Euro yen will go up. So that way they will try to gain the levels. Now we'll do the market reading part of it. So these are all the levels I noted down by 3:30 GMT in four majors and two commodity pairs, and Euro formed the low 1.2506, and here they are showing a wrong one on Friday, and after about European session this gets changed. Okay, but others remain okay. So the high was 1.2520, such a narrow range from 1.2506 to 1.2520. They are making the swings, and currently it's holding around 1.2517 to 19. In GBP, 1.5954 and 1.5984, and 84 they are breached, and they are holding near the high, and Euro and GBP are showing positive net change, and GBP is showing more positive net change when compared to that of Euro, and much more is seen in the case of Australian dollar. Because Australian dollar has made one-sided drop for many days, and from that of 0.93 it has come to 0.96 area, it is expected to gain quickly level, and I call it as the commodity pairs lead the rally and lag behind. Then you will find that Australian dollar will gain up to 0.88 and hold, whereas Euro and GB will continue to gain the levels. Then in the case of USDN, which is expected to show a range-bound moves here, and currently it has not breached the high on 109.85 to 109.55 was the initial low. They breached it by 1 pip and formed 109.54. So they are expected to make some contrarian move as far as N is concerned. When Euro and GBP gain the levels, you will find initially USDN also gain the levels, and subsequently it will drop. And you know that the players handle the crosses and the majors in a sequential way during that of the trend reversal time. So what they do is they handle the commodity crosses, then commodity pairs, then they come to that of the yen crosses and yen, and then the majors, and finally the European crosses. The crosses of Euro, crosses of GBP, and crosses of CHF among themselves. And that is how they handle the market. You will come across that during this week. Till Wednesday, they will be handling them in sequence, and finally you will find they will handle aggressively majors Euro and GBP for that of BOE interest rate decision and FOMC minutes, and later on you will come across that European crosses have to be handled by late Thursday and Friday. Then in the case of CHF 8670 and 8688, 9688, they are not breached the lower the high. It is making a narrow range swings, and CHF, it has breached the low. 1.1244 was the initial low. They breached and staying below that. So it is likely to make further drop. And 1.1265 is the high, which is intact. And you know that CHF is a currency which normally makes either way stop and move. So they could make further downward move and quickly breach some of the psychological level and come above and breach the high also. That is how they are expected to do either way stop ins. You can watch carefully, and once they stop cutting the new low for more than 30 minutes to 2 hours, you can take a buy and quickly book profit during the rise. And once they stop cutting the high for more than 30 minutes to 2 hours, you can take a sell, then you'll be able to book profit on the downward move. Similar is the case with regard to Australian dollar. What they do is they will just gain for one day, gain for the second day. Then the third day they will hold near the high with upward stop move and start making the slide for one day, second day slide, and the third day lower level swings with a downward stop. And that is how the sequence of moves are going to be. So that is how we'll come across the wide range swings in the case of USD CAD and Australian dollar. Then Australian dollar 86.53 is the low, 87 is the high. They are not breached the low or the high. So Canadian dollar alone, they breached the low and staying below there. So you can understand how sporadically they just breached the initial lows and the highs in the case of yen and the Canadian dollars. And also in the case of GBP, all are showing that USD weakening move is to happen. But they are expected to make the USD weakening move during that of the Japanese session, and then European session they are expected to make a small slide and just probably go closer to that of the lower, make a false move near that of the low, and then start gaining the levels from US session or from a late European session. So in market trading, what you do is note down the initial lows and the highs around 3:30 GMT in 4 majors and 2 commodity pairs and wait for the market to come closer to low and not breach the low for more than 30 minutes. We try to take a buy and keep 30 pips hedge order. And once the position shows some profit of 15-20 pips, immediately we keep stop at entry and remove the hedge order. So as a result, you find the hedging is used instead of stop. If you use the stop, the position will be closed. If you use the hedging, it will be hedged. Still, we'll be holding the position to review it in relation to the market moves and take appropriate decision of closing either the hedging or closing original position and try to trade with the other position. So that way, you get that opportunity when you use the hedging. And also after keeping stop at entry, we eliminate the risk to nil so that we don't incur any loss once you keep stop at entry. And then we find that once the market moves in our favor, we are able to maximize the profit using a trailing stop and also trailing limit order. So this trading strategy is vital and you have to follow it carefully and keep initially the take profit order, the exit order around 45 pips. If the going is good, you can move it up to 75 pips. And if there is a good day like last Friday, then they will make about 150 pips net change level. Here you come across the net change and then you can follow that and you know there is a permissible level on a daily basis. And you can, once they show it, you can book profit. Once they breach 75 pips net change, it is unlikely to recover on the same day. They will only recover it on the next day. So in that change, once they make more than 75, 80, 85 pips, you can simply wait up to the formation of 100 to 150 pips. 100, they will do it if the volume is low. 150, if the volume is high, then you maximize the profit on the downside in the hedge and keep another hedge order 30 pips below. Then they will start gaining the next day the levels and trail the hedging order upward until you are able to keep stop at entry. And you know that during such moves, they invariably gain quickly, hold, gain quickly, hold. So that way, if they do it, many of the traders will think that it is a pullback, so we'll do sell and buy. and again another pullback, do averaging and sell, so that when they drop, you will be able to book profit. That is how they will go for it. So the players make the move in such a way so that the traders are induced, and especially near that of the resistance, calculated resistance, they will try to hold and start making a slide. Then the traders will immediately think that, okay, market is behaving exactly as per the statistics. So it is coming closer to resistance. It is not able to breach the resistance and go above. Euro does not have a strength. GBP does not have a strength. So it is better to take sell position. That is how they take the sell, and later on it breaches the resistance, and then statistically people will say the resistance has turned support, and there we assume that euro is breaching on its own, but euro is inanimate. No, it is only a ratio, calculated ratio, and this does not have any physical value. These are all nothing but the ratios. And euro is the currency, GBP is the currency, US dollar is the currency, but these levels are nothing but the ratios. Whatever the positions you take, you have to liquidate in the market. You cannot do anything else with such ratios. So we simply talk in terms of euro when it is euro USD ratio. No? That is how we are being misguided, and we immediately think that, okay, euro does not have a strength to go up, it will fall, so we'll sell euro. Then what happens? The players breach and show that resistance turns support, and immediately everybody goes for a jumping of the buy and sell technical trade or the breakout trade on the upside. Then afterwards, the players drop the market and induce them to liquidate the long positions and then continue to rise. So the players are here to trap the traders. Whatever be the method of forecast we develop, and whatever be the type of analysis we do, players are here to make the moves in the market after we commit positions. So follow any forecast, and finally you commit positions. The players find, okay, predominant of the traders are long. Okay, we'll make a drop and induce them to liquidate the long positions. The predominant of the traders are short. Okay, even though if the data is good, they will simply make a rise in the case of euro and GBP and give one excuse. So ultimately, which is determining the trader's position? So if the predominant of the traders are long and they drop the market, if predominant of the traders are short, they gain the levels in the market. So as a result, understand that the players create the market sentiment to induce the traders to commit positions, and later on they act against that of the traders, so that the traders become surprised and liquidate the positions in distress. Day in and day out, you come across the same, and there is no change. So only thing is, we need to understand how to capitalize such situations, because we cannot go and teach the players to be honest, because they are the richest in the world and they will never change their mindset. They do not want to come down in their status. So there is no point a small layman to go and tell all the informations to them. And even if you tell them that you cannot eat money, you have to only eat food, and money can be used to buy food, and it cannot be used to buy happiness. But they don't understand all those things because they are under the highest greed of making money and maintaining that status in the world. So what we can do, in a humble way, try to read their intentions and try to capitalize it and earn our small profits from the market. So in which way we can do it? We have to read their intentions and try to make money. So whether they are breaching the low or the high, and just watch what type of move they are going to do it, and whatever the information they get from that of uh, the exchanges, etc. And later on, they try to make the moves. Initially, to start with a cunning move. If they want to rise the market, they will make a small dip and then rise. So such false move, you try to recognize and enter into the market. Then you will be able to quickly book profit. So it is something like if they want to run on the left hand side, they will pretend as if they are going to run on the right hand side and then turn left and run fast in order to escape. You know, like the police and the thief, they try to do it. So here you come across that they always make a cunning move to start with and then the intentional move. So during such cunning moves, how to differentiate the cunning move and the intentional move? Cunning move will be very fast. Intentional move will be slow. So if they quickly make a dip, understand that they want to gain the levels. They quickly make a rise, then understand they want to make a drop. And especially before the data release, so that they use the data release time as the trigger to make moves in the market. Only then the traders will think that, okay, the market is moving in tandem with the economic developments. And you know that economic developments cannot happen second to second, but still you come across the market is making the fluctuations. Anyhow, we use them as excuses and use it as such instead of ridiculing them, and try to see that how exactly you can make money. That's most important for small traders. These are all the market timings followed by that of the players. So try to understand the three sessions they have formed based on the natural occurrence of the global positions and also the bank's opening and the closing time. In between, you come across the gap times. During that, they try to make the false moves. So understand how exactly they are making the moves. If you follow the live market code page with the GMT time frame, you will find exactly those times the market will become aggressive, quick. Then you can understand how they are trying to make such moves in the market. So if you got any question, you can ask me, and I'll come back again tomorrow, and I will give Tracking the Forex Market Together webinar in two parts, part 1 by 8 GMT and part 2 by 13 GMT. During that at the start of the European session and end of the European session and the gap time under the early part of the US session, I'll try to give the webinars. So in that, I will take the positions and explain the trading strategies and see how exactly, respective of the market condition, we should be able to book profit in positions. So then you'll be able to understand the forecast is a guidance, the market reading is fine tuning of the forecast, and ultimately the trading strategy is going to win and earn the money for us. Then I will review the forecast on Thursday, 9th of October, and see whether the market is moving in tandem with the forecast or against. We'll objectively review it every week. Then, if there are questions, you can ask me. I'll answer to the questions. Then, Eric has got a question. Last week, your forecast for GBP expected high was around 66.50, 62.52, but for this week between 63 to 59.84. Any reason? Yes, they have made the drop, and you know the weekly permittable level, they are all mathematically calculated levels. I told you the weekly permitted level is about 350 pips in the case of Euro, about 600 pips in the case of GBP. But nowadays they don't make 600 pips go in 1 week. They are only doing maximum of 350 or 400 pips in Euro and GBP. So based on that averaging, it has been estimated. That is why the levels are reduced. Not that I have become bearish. Because, you know, it is the last quarter, October to December, they just make their dip in the market and buy the positions. And year end, they rise and book profit. So by year end, we will understand why there was such a big drop in the case of Euro and GBP on October. But at the time of drop, we become afraid. We try to say that your forecast has not come true, or just angry with me, and there is no point in following this fellow, and things like that. And later on, you realize, yeah, that was correct, and they dropped the market, and We could have taken a buy position and huge profit would have booked. And when I was telling, when euro was around 1.39, 1.40, they are going to drop it. When you were telling that you are the only fellow telling that market is going to drop, whereas everybody is expecting the higher levels. After the drop, they appreciated. At the time of dropping, they said, no, there is no point in following you. It's better to do buy and sell trade. That is bound to happen. Forecast is the one which has to give exactly what is going to happen in future. It is not either way possibilities. Anyway, I do not want to comment on others. If you've got any questions, you can ask me. I'll be willing to answer those questions. I'll show the PowerPoint, this one, the expected market moves for this week. For those who have come late, for you to follow it. Okay, there is a question on the question page. Then Gregor has got a question. Gold and silver more back down to normal levels, sub 10 and sub thousands. No, it is unlikely to come to those levels, and they are expected to reverse the commodities also from this week. They only accumulate. For quarter is nothing but 3 months. That is why the first quarter, second quarter, third quarter, fourth quarter. There are 4 quarters in a year. There is every 3 months, January to March, and then April to June, etc. They are all called quarters in the financial market. Then what is the forecast for? Daniel has got a question. What is the forecast for USDN? USDN is expected to make the range bound swings on either side. And then it. Okay. May we specify the quarter period? That's what I explained. Any first year end, December or April. The year end will be December in the international market. And certain countries, they follow year end, financial year end is March, like India. Okay, no questions here. Then here in the chat window, because there are 2 windows, so I have to look into that for questions. Okay, what will be the range for gold? Eric has asked a question. From 1200 to 1230 will be the initial range to start with, and you will come across the gold started gaining levels from next year in a very big way. And we have seen the multi-year trend reversals happened when gold was around 1900, and from there it has dropped. And again, you'll soon see such moves happening in gold. Before that, the players are accumulating the positions by making drop. And whenever people talk about safe haven, immediately they will think of gold and rig it upward. And oil also, they just rigged and dropped it. That is why, in order to keep pace with it, of the oil drop, they are holding gold and silver at the lower level. So they create the sentiment by making tandem moves in all that commodities, so that the traders will believe them. Then EuroCAD and GBP New Zealand expectations. Now, so as I explained, that euro is expected to gain the levels, and USD CAD is also in the range bound. So you'll find more of a sideways move in the case of euro CAD and the New Zealand dollar. GBP New Zealand. GBP is expected to gain level. New Zealand dollar will be in the range bound. So sometimes you will come across the rise and sometimes the drop. When GBP is gaining more and New Zealand dollar is dropping, then GBP New Zealand dollar will go up. Then GBP is rising and New Zealand dollar is also rising at that time, you will find sideways move. That is how the moves are going to be in the case of crosses. And you will come across this week more importance is given to that of the majors. So others are expected to make more of a sideways move, like N crosses. So all the time, if you commit or take the positions in the same currencies, it may not work well, especially the crosses. Then Victoria. So I understand to trade against the common traders' sentiments. Okay, the traders' sentiment is not being given anywhere. Okay, so it is a question of only the analyst. They say that market is bearish or bullish. Okay, and the traders' sentiment, the court estimates, etc., what is given is only with regard to the brokers. No, actual positions taken by the traders won't be known to anybody for that matter, and only the players will know. So we have to follow their false moves in order to understand what is the sentiment of the trader. Even though Euro and GBP are dropping last week, and for non-farm payroll, they made the drop without a reverse, indicated that traders are predominantly long holders. That is why they did not reverse it. And there are so many occasions wherein we have seen that Euro and GBP, they just drop or the rise. They make the moves for about 20, 30 minutes and later on reverse the previous non-farm payroll, and before that also they made such moves. But last time, Friday, they just made one-sided drop. So ultimately, we will come to know of it after the move. If the intentional move is on the downside, that means the traders were predominantly long and they would have liquidated on Friday. So that is why the market is calm. Otherwise, they would have continued to make a downward opening and make a killing for such long holders. But now they are holding it. So that means predominant of the long holders have liquidated the positions and they are all being absorbed by that of the players. So after buying, the players need to rise the market to book profit because they cannot keep quiet. Do you recommend to buy Australian dollar? Australian dollar is going to be range bound. You can buy whenever they are making a drop and it will only go up to 88.50. Keep that in mind. Don't become too bullish or too bearish. That's what. People are asking in both the windows. So, then Chowkiat. Before that, there is another question. Then Aussie will be range bound between 86 to 90. No, 86 to 88 will be the range in the case of Aussie. That is estimated. So we need to see whether it will make further upward move. Then GBP downside in the coming buy during European market. Yes, when they are making a small dip, the case of Euro and GBP during the European session, you can take a buy. The players later on will know by year end. Yes, no correlation with Forex, sir. Please don't correlate markets because they may appear when you compare the charts and later on if they deviate, you will not be able to understand why they are deviated. And then later on you will find some other comparison coming up in the market. So that is not the right approach because that does not give the genuine relationship. That is why, no? See, apparently looking similar is different. That we call it as coincidence. Okay. No more questions. So I will come back on tomorrow by 8 GMT, start of the European session. And also during that of the gap time before the start of the US session, tracking the Forex market together, part 1 and part 2. We will discuss more about the trading strategies. So you can come with the questions. I'll be willing to answer to those questions. If you ask questions, then I'll be able to understand the level of your understanding. And accordingly, I'll make my explanation as simple as possible so that ultimately you are able to understand. Okay. So thank you one and all. Wish you happy trading and see you tomorrow.